Hello, everybody. Joe Malone here. It is Election Day, and it is Tuesday, November 3rd. I hope everybody was able to make it out to the polls. I certainly did. I was early in line here in Dallas, and but there was still a line when I got there. But it went pretty fast. Just as far as the polls are going, we seem to still be. Let's see. We seem to still. Biden seems to have a small lead on the IBD tip poll, but who knows what's going to happen by the end of the day. And the stocks are moving up, so that's interesting, and that's a good thing. Basically, there has been a rally into the afternoon. Everything is green pretty much on everything except for the oils. The oils are down. As a matter of fact, Chevron is off significantly. So that is one of the areas that is kind of under question. Interesting thing. This is sort of a kind of an anecdotal thing on the election because it is going to be very, very close. And that is basically, for many years, for the past 23 elections, there's a man named Ryan Detrick who basically is a market strategist at LPL Financial, and he basically has a interesting correlation, and that is that if the S&P 500 is up for the 3 months preceding the election, 87% of the time, the incumbent wins. So, interestingly enough, that would point just barely to Trump, which is interesting because the polls are saying Biden. So we shall see what's going to happen. It's going to be a contested one, I can tell you that. It's going to be very interesting going into that. But it might be a split election again, where Trump could possibly squeak out a victory in the Electoral College, and be behind in the popular vote. It looks like that might happen, but we'll find out. But anyways, I think the market is reacting with a little bit of relief. We're over 11,000 again on the Nasdaq. Just kind of wanted to show you. This is taken a little bit earlier today, before about 12. We were up almost 2% on the Nasdaq, so that's kind of good. But we're still in correction. What that means is that if you look at the top here to the bottom here, that's more than 10%, even with this uptrending that we have going on now. So we are still in a correction. And basically, when we're in a correction, the most important thing to do is to, is not enter any new positions in terms of size. Kind of scale back on your positions. Now, I broke the cardinal rule. I've been selling into this, but I did pick up a breakout stock that I'll talk about a little bit later, and that's Form Factor, and it did break out today. So it's one of the 3 breakouts that happened today. So that, I did pick up a little bit of that, just a full position in the small portfolio. Also wanted to show you a little bit about the high-low ratio. Now, this is a very interesting metric in that it shows reversals in a bull market. Now, even though the market is in correction, we are still technically in a bull market, and we're having a correction in this bull market. So the question is, when is the correction going to end and move higher? Well, this chart basically shows that if this line pulls below 0.5, and then it's a very high likelihood that it will reverse. When it moves up for the first day, that's typically when the reversal is noted. If we are looking specifically at this indicator, we are still not at a reversal point, even though we're up today on the general market. So basically, we're going to have to wait until there's a follow-through day in order to start going all in. So basically, right now, the best thing to do for everyone is to sort of build your watch list, kind of get ready, because I do think that once this election is decided, I think going into the end of the year, it's likely to be quite good, because I do think there's going to be some stimulus coming our way. So that might be a very, very good way to pick up some very nice upward trend in the market. The interesting thing about this is typically November and December tend to be two of the best months statistically for the stock market. So hopefully that we'll be able to see that this time. So I'm hoping we will. Just wanted to take a quick look at the SPDR. This is the world's largest ETF, of course. Many people have their entire net worth in this particular ETF. It's one of the original ETFs, and it is literally huge. And it's up today, $6.31 when this slide was taken, almost 2%. Now, here's the interesting thing. I think we might have seen a reversal on the SPDR. If you're looking on YouTube, and by the way, for everybody looking on TikTok, I'm simulcasting this with charts on YouTube at youtube.com/Dallas Trading Floor. And this is episode number 166. It looks like we have made a turn, and hopefully this will hold. Basically, the follow-through day probably will occur if we have another up day, and then it pulls above this 50-day moving average. So we're below the 50-day moving average. We're below the 50-day moving average right now, but we look like we may have made a turn, and that basically is being noted by both the high-low indicator and this potential move to the higher on the SPDR. Now, the QQQ, this is the NASDAQ 100 ETF. It's one of the largest in the world. This is sort of where all of the good tech names hide. In this one, it also has made a movement higher, but we're not really out of the woods. This may just be a head fake. You don't know. We won't know that it has completely changed direction until we have a fall through day. We definitely don't have that right now. But it's up. It was up $5.85 earlier this morning, up 2.2%. And it is at a very, very key level. That's the 275.83. 275 is the key level on the on the NASDAQ. If we stay above that, I think we're likely to go higher. If not, then we probably will correct for a little bit longer. But currently, it's time to be a little bit careful. Try to get into cash as much as you can. There will be some superior buying opportunities coming up once we figure out what's going to go on with the selection, how that's going to shake out. And basically, I just wanted to show you kind of the first of many. This is a cup with handle formation that I bought this morning for the small portfolio. And it is a company called FormFactor, and they have a very interesting business in that many of the equipment manufacturers that make semiconductors use their products. It's definitely in the equipment manufacturing area, but it did have a breakout today, and the cup base for the cup and handle formation was basically over 3 months. So it's really that's a very classic cup with handle formation. It was up about 5% today, or about $1.69. The proper buy point on FormFactor basically is 30.04. So basically $30. It's moved a little bit higher than that. So that's all that's gone into my small portfolio, and hopefully we'll do well in that. I've really cut back my holdings. Right now, I'm only in 3 issues. Cloudflare, which is up today, the Grayscale Bitcoin Trust, and then FormFactor. I did sell Qualcomm, basically going into earnings. Earnings for Qualcomm is tomorrow, and the way that the techs have been treated, it's a good idea possibly to unload before earnings, because they have been pulling back way back. A good example of that is PayPal. They had superior earnings, but yet they pulled back very, very heavily. So right now, it's a little bit, the uptrend, we don't really have an uptrend. We are still in a correction, so we've got to be very, very careful. I'm mostly in cash right now. And just flip over to the screen here for, let's see if I can get over there. Yeah, okay. Get over to the small portfolio, kind of show you how that's looking right now. And by the way, this is available for everyone to take a look at. As you can see, mostly in cash right now. This is the one position I did enter in today. I'm up 1%, not a lot. I basically entered at 37.79. I didn't enter quite at the buy point. of 30.04. That would have been super great if I'd been able to enter at that point. But I'm definitely within the buy zone. And remember, the buy zone typically is the buy point plus 5%. So we're solidly within that. The Bitcoin Trust is up. Of course, I wish I had bought more, but, the Bitcoin Trust probably, it's a good uncertainty play. And then, of course, we had a gap up on Cloudflare, and I've been in that for a few days, not all that long. But I'm up about 11% on that. Did sell at Tupperware, which was a breakout, in Qualcomm, and they did okay, but 2 and 3% for really short holds for basically less than 2 weeks. So not bad, but just want to keep in cash right now until we have that fall through day in order to kind of make a stand there. So let's get to the questions. Thank you so much for holding on. Hey, Juan, that's great. Yeah, what are your picks after the election, and how long would you wait before a buy point? Okay, well, I did have one pick today, and of course that was Form Factor. It was basically breaking out. Just kind of want to show you that. I had two breakouts as well, and I'll show you that just as in a sec here. Here we go. This is the watch list. Form Factor, again, this is showing the sizing in the small portfolio. And basically, it's in the buy zone currently. I did have Zendesk in there as well, and it is extended beyond the buy point. This was a breakout as well. And of course, Tupperware. But I've been really kind of stingy on this. I haven't really been filling out some stuff. We're definitely gonna see, and that's why it's really important to possibly go to sign up for the link for the small portfolio, because I will be taking and making this. I will be updating the watch list on the breakout. So basically, if you want to get free action trade alerts, super easy to do. Just go over to www.DallasTradingFloor and just first and last name and subscribe. Of course, it's totally free and cancel anytime you want. So it's basically how I'm maintaining my my watch list and then pushing it out to everybody else, hopefully. So maybe they can get some benefit on it. I'm not, I'm never, nobody is 100% right, but I am trying to go off strict, can slim buy points at this point, because we're not in an uptrend. So it's time really to be in cash more than anything else. Just wanted to show you a quick chart again of Form Factor, and part of the reason I bought it. It has pulled, as you can see. This is the cup and the handle, and then we pulled up today. We're at the very top of the buy range. We're not up a lot. We're $1.90. This isn't really, this isn't going to make you. This isn't even going to probably make your car payment stock, but it's looking pretty decent. Hopefully I'll have some more of these as the conditions starts to change. I do believe that once we're through the election, we're going to see, we're going to see the conditions change a little bit, and we're going to get more buy points. But right now, Form Factor was the only one that that I was in. Okay, so if Joe wins, what's your go-to stock? Well, that's a very good question. I do think if Joe wins, we will see more strength in the healthcare sector. Part of the reason there's been such ferocious pushback on Trump is because healthcare, which is approximately 15% of the economy, is very dependent on charging high prices. And when they get drug price transparency, this is going to take the wind out of a lot of sales of the healthcare industry. So believe me, the healthcare industry in there doesn't want price transparency, because they're going to lose their edge. So I do think that if Biden is elected, I think we'll go back to a lockdown. And I think there's only going to be a few industries that really benefit, but there's going to be industries that benefit tremendously, and one of them is going to be healthcare, because they're basically going to be able to charge whatever they want with no price transparency. So healthcare will be the go-to probably if we are, if we get a Biden victory. So we will see what happens there. You never know. what's going to happen. So it's still up in the air. Let's look at Oxy and some of the oils. The oils were doing horribly, by the way. Chevron is down, but let's look at Oxy. I don't even think Oxy is investable. This is not an area that you want to be in right now. It just isn't. Look at this chart. It's pretty awful. And I just don't think that you want to be in it. It has a relative strength of 1, which is, it doesn't get any worse than this. And a price. This is getting into penny stock land, folks. Just don't even buy this thing. This is just going to be painful for everybody included. Now, this isn't even a good short because there's not a lot left to short. The checklist is horrible. It's basically only 2 out of 9. That's just not buyable. There is a decreasing fund ownership. Unfortunately, this thing is going in the wrong direction, and I don't think it's necessarily going to come back. Even ExxonMobil, ExxonMobil's going to have to cut their dividend, which is absolutely amazing because that was once the greatest stock around. So let's look at XOM. That is the symbol for ExxonMobil. It has a similar tale of woe, unfortunately. These just aren't buyable. You don't want to buy these stocks, even though they might seem cheap. You say, "Wow, I could buy Exxon for $33. That sounds like such a bargain." Don't believe it. In stocks, you don't want to necessarily buy bargains, and here's why: because you're not buying to own it forever. You're buying it to resell. So, right now, the trend, the trend in this stock is just terrible. I mean, it's just going down, down, down. It's got a relative strength of 7 and a checklist of 3 out of 9. So really just slightly better than Oxsteel Petroleum. This is so sad. And to round it out with the oils, which you don't want to be in, is Chevron CVN. And, I don't think, Chevron. Let's see if I can get that one up here. CHEVRON. And hopefully I don't even know. CVX. There we go. Here's CVX. And let's see if we can get okay, come on, baby. Let's see if it'll give me something for CVX. No, doesn't quite do it. Okay, well, needless to say, CVX isn't doing too well either. So let's see about BP. This is also going to be bad. The oils in general just aren't where it's at. Yeah, here we go. Here is the ADR for BP, and of course this one's got a relative strength of 4. Oh, just terrible. Don't want to be in any of the oils. It's not where it's at. The market is voting, and the market says that we're going to probably have electric cars. So, Tesla did bounce back nicely today. I was shaken out of Tesla. I may be back in if we have a confirmed uptrend. I'm not gonna chase it for right now. But let's take a look at Tesla. TSLA is the symbol, of course. And it's moved nicely back up to the 50-day moving average. So it is definitely getting near buyable once again. It did pull back before the election. I do kind of want to see a turn on this, but this looks like we have a turn potentially on Tesla. So was shaken out, but it may be time to get back in. Still has a really good checklist. 2 out of 9, and increasing fund ownership. So everything's looking pretty good for Tesla. It does look like it's made a turn. I haven't pushed back into this issue yet, just because I want to see a confirmed uptrend. But it looks very good because we have moved above the 50-day moving average, and that's a key level for Tesla. So let's take another question. NIO. Yeah, absolutely. NIO is looking very strong, by the way. I agree with you. I was talking with a woman that called in from Chicago earlier this morning, and we were going over the charts for NIO, and it's looking very good, by the way. I was just trying to find a good buy point on it. It's on the watch list. The only concern is there is earnings per share in 14 days. I don't know with the Chinese stock if this will make as much of a difference. But here's the interesting thing about NIO. It does have a very strong checklist. 8 out of 9, that's very good. The ownership on it is increasing. That's very good. And by the way, they did get the right to sell to sell cars in Europe. So that is going to be very strong. I think that NIO may be a very, very strong competitor in Europe currently. Of course, they don't sell in the U.S., but the Chinese market for electric vehicles is also huge. And I do believe that this is viable if there is a pullback if there is a pullback to the 10-day moving average. The last buy point on this one was way back in August, and it was at 1545 on NIO. So we've moved significantly above that. We're at 3543. So this thing will probably pull back to the 10-day line. I don't know if you're going to be able to buy this below 30. I don't really think you will be. But if there is any pullback on this, I think you want to possibly do it. It's definitely a watch list stock. And right now, my only two concerns are the market is still in a downtrend. I think we want to wait until we get we get a follow through day, which we're not there yet. So it could pull lower. The overall market could pull lower, but NIO looks very good, and I think it's very, very worthwhile because the electric vehicle market. I mean, that's where the dollars are being voted. So that's where you are. Let's look at BEP. Let's see if I can give you a good choice on BEP. BEP. This is Brookfield Wren Partners. It's an electric company. And let's take a look at their chart. Yeah, it pulled up nicely today. We have some nice strength here. No real, the last real buy point on it was about 41.98. That looks like the last buy point on it. It has pulled above the 10-day line, so it does look like it's looking pretty good. Let's look at the weekly chart to see if there's any entry point here. There really isn't an entry point on there, but it does look very good. It's got earnings, though, in 2 days. Here's what I would do on this one. I wouldn't necessarily buy this one into earnings because, shares have been just punished so much coming through earnings. This is definitely a watch list. So BEP, but wait on this one until it comes through earnings, and that's basically on Thursday. So that's when they're going to report. Now let's look at the checklist to make sure that we've got a good checklist. We have excellent, 6 out of 9. That's definitely viable. We have barely increasing fund ownership, but we do have increasing fund ownership. It's looking pretty good. It's about 30% funds. That's good. That's very, very good in forms of a chart. This is looking very good, and also it's got a little blue dot, so that's very exciting. The relative strength is at an all-time new high. And by the way, typically you want to find relative strengths over 80, and of course when they get this little blue dot, that means that this little relative strength line is at the new high. What does relative strength mean? If you took the S&P 500 and you took this stock and you put the graphs side by side, that's what this is. This is outperforming all but 7% of the S&P 500. So this is excellent stock. Brookfield Wren Partners. Not really a great place to buy it right now. I would want to see a pullback to the 21-day exponential, and I think you could get that at about 54.28. It's at 57.79 right now. Not a really good place to buy it, but that doesn't mean it's not viable. It just means that it is just kind of moving up directly up the 21-day exponential line. Now, here's the thing on that stock. Don't buy it until earnings. Wait at least 2 days. See how it comes through earnings. It may pull back. If it pulls back after earnings, this is a buy. But don't buy it prior to earnings because this thing may pull back. And if it pulls back, then it probably will reverse at the 50-day moving average. And if it does, when those reversals, that's when you have the power alpha pivot, and it can be very, very good thing. So watch this one. Wait on this one until it pulls back, hopefully to the 50-day exponential, which is basically about $50. If it pulls back to there after earnings, it probably is going to reverse and go higher. So this is a great stock, and thanks for the question. I appreciate it. I'm putting that on my watch list as well. I'm going to try to create an expanded watch list as we come hopefully out of this correction, And once we're out of the correction, then there's going to be a lot of stuff to buy. So we're going to have to be very careful about what we buy because we want to buy the stuff that's breaking out off of a good chart pattern. That's really going to give us our best bang for the buck, as it were. All right, bought Neo yesterday in pre-market, sold today for a quick, nice, Christian. That's a good way to play it. I wouldn't hold this thing through earnings, but Neo is just moving very, very nicely. Yeah, that's a very, very good play. So you should be very, very pleased with that. Let's see. Okay, we're gonna come in some other ones. What healthcare stocks? Well, currently, United Health is probably the best in that. I think it's you. I think United Health is the best in that sector. Let me see if I can get I don't know if I can get a sector for you on that. I don't know if I can. Let me just see if I can find that in terms of a sector. Let me see if I can get United Health for you. That's going to be the big one. Let's see. Let me give a symbol. And this really is going to benefit more from a Biden win than than anything else. Goodness gracious. Heck. Well, I think it's UHC is the symbol. So let me see if that works here. Let me see if I can. I should know this offhand. UHC. Let's put this in. No. Okay. No, I got it wrong. Well, anyways, the medical medical stocks are going to be the ones that probably do the best if there's a Biden win. So that's right. What about the SQQQ? I think you want to exit the SQQQ right now because it does look like after this election is finalized, we're going to, it may calm down again. You only use the SQQQ. The SQQQ is not an investment; it's just a hedge when there's a turn in the market. And I do think that we're going to turn up. And right now, the SQQQ has fallen off down below the 50-day line. So this is telling me that we're going to turn, but the market in general is going to turn upwards. There is a companion ETF to this called the TQQQ, and I want to show you the chart on that one. That's probably going to be the one that you want if we have a follow through day. Yeah, okay. Right now, let me show you the TQQQ. This is the companion again to the SQQQ, and that does have an 89 relative strength. It's pulled up today, so that's a good sign. It's up $7. I do think that there's a good likelihood that this one will go higher, and the SQQQ is what you buy in a falling market, and the TQQQ is when there's a reversal on that. So that might be something that you want to look at. I wouldn't be in the SQQQ right now. I just don't think that's the way to go. What about Canopy Growth? The marijuana stocks in general have underperformed, but there is kind of a way to play that. There is a ETF called it's called Alternative Harvest, and I don't recommend it. I was in it before, but this is when the marijuana stocks were doing better. It's not doing very well, and I don't think Canopy is as well. So right now there's an oversupply in the market, and it's not legal in a lot of states. So unless they can get something like the hemp-based energy drinks, which they're trying to do, Constellation Brands is, then I don't think you want to be in Canopy Growth. I just don't think it's gonna be. I mean, it sounds like it's it's a slam dunker, but believe me, the marijuana space is just not the place to be. There's just so much supply. Everybody wants to have their own marijuana farm, which I understand, but there's just way too many people in the business, and it's just not looking good. Okay, this is an interesting one. This is a Canada-based company that manufactures electric vehicles, and so this is another electric vehicle play. There's a lot of electric vehicle plays in here. I do think, though, there is one that's coming out that may be good. Don't know yet. It hasn't come out. It's a SPAC, and that, of course, is Frisker, and that will come out. And the reason I like that one, potentially, as opposed to the other ones, is that they have a deal with Magma, which will actually allow them to produce the vehicles. This is got a 94 rating, so it's not that bad. It's but it's basically down from its pivot. The pivot on this one in the first stage consolidation was a 415 pivot, and it was, it was back a while ago. I mean, it was basically it was basically over a year ago. So I don't know. This is a penny stock, $2.81. It's up 3 cents today. It just doesn't have a good enough checklist for me. 4 out of 9. There's better ones out there than this. So, just a word to the wise. I mean, it's cheap, and it's cheap for a reason. And is that? There we go. Very good. Am I on? I hope I am. Okay, it should be on. I guess I had it off there. Wow. Okay, so hopefully I'm coming up on the. Let me check my mic to make sure that it's working. I've had issues with that, so let me just make sure that I am working on the. Yeah, I am good. Okay, so sorry about that. Okay, so let's look here. I'm in your Oh, wait a minute. Oh, I got these. I'm sorry about this. I had this on a timer. Thank you, Marston, for bringing that to my attention. I had this on a timer, and the timer I didn't quite have it set right. Technical difficulties. Apologize for that. I'm going to see about that on the email. So I do apologize for that, but I really appreciate you bringing that to my attention, very, very, very much. So that's kind of a good thing. If an uncertain we'll pull back. We'll pull back mercifully. Thanks. Well, Arnold, I'm thinking that in this election, we're going to see. I think that we may get a little bit more of a pullback, but I do think we may, once this thing is decided, we're going to see it move. We're going to see it hopefully move higher with a distribution day. Right now, we're not at that level. Unfortunately, we're just not at that level. So that's that's kind of the deal. Emails, in fact, yeah, absolutely. Thank you, Gardner families. Appreciate it. I know my emails are, I'm working on working on all this stuff. How about MTSC? Let's look at MTSC to see if there's anything there. MTSC, and see if I can give you something good. This is Manufacturer Simulation Systems, and it's basically let's look at the chart of this one. Eden Prairie. Okay. It looks like it is forming a cup with a handle with a 25.79 buy point. The relative strength is 47, but I wouldn't buy this one. It's just too weak. 47 is not a good enough. It's not good enough to buy on this one. 4 out of 9, and it does have just slightly decreasing fund ownership. This one just isn't good enough. I don't think you want to be in this one. It just doesn't meet the criteria. Now maybe it will be later on, but for right now, no. I don't think that's that's going to happen, unfortunately. All right. Are those virus stats? No, I don't think so. Those are just stock stats on that. All right. What's the buy point for Apple? Apple has kind of disappointed as of late. I was a holder right into the split, which was on the 31st of August. It split for 4-for-1, and that really, when it's made it high, it's not been able to gain back since then. Let's take a look at the chart so that we can kind of take a look. There is a consolidation base here. It's not a great one. It's a third stage base, which is not as good as a first or a second stage. And it's fallen below the 50-day moving average. I think buying it at 111, it's not. It seems to be stuck right about at this level, about 108. So, and I was saying it was in a range from about 103 to about 108. I don't see this one moving It's got a relative strength of 90, which is good. We have it's a little bit down in terms of fund sponsorship. The checklist though is not good. It's 5 out of 9. I just think that there's better opportunities out there than Apple right now. The last buy point that I have on it is basically on a consolidation basis 137 96 90 98, and we're way below that right now. So I just don't think Apple is going to be the one for you right now. I can't see it doing that well. Okay. I pulled out. Okay, Jim. Thank you, man. Picked up UVXL hedge. Oh, look at the UVXL. This is a hedge device. UVXL. Let's look at UVXL. See what's happening here. No, I don't see that. That's interesting. Okay. Snap. Let's look at Snap. Snap's been doing great as of late. SNAP is the symbol on that, of course. And we've got a flag pattern. Oh, yes, yes, yes. Okay, folks, this is an interesting thing. We're going to see if the market turns with an up day, we may see this thing move a lot higher. This is the beginning of a flag pattern. This is a very, very bullish. This is a very, very bullish chart pattern. When you have this tremendous movement up here, and then there's a consolidation, that is a flag pattern. Now that's on a weekly chart. That's where we want to see it. So let's look at the daily chart. Okay, this is looking relative strength of 98. Okay, this is going higher, folks. So this is definitely going onto the watch list on the small portfolio. So SNAP watch list, and I'm going to put this one out. I may have an alert on this one. This, by the way, the way I found that is, of course, is I'm looking at the chart pattern here. We had super duper earnings. We had a pullback a little bit, and then we have it up today. So if the market direction changes on this, we're likely to see Snap move much higher, possibly as high as 50 or 60. I don't know. I don't know if that's around the corner or what, but it does look like that may be the case. Let's see if we can go back, kind of go the Wayback Machine, and we're making a new high too, so that's good. Let's look at the buying checklist. Checklist is good, 8 out of 9. That's definitely good. Let's look at the ownership. Ownership is strong and it's increasing. Snap is definitely on the watch list, and I may have a buy alert for you on this one. I wouldn't buy it today because I want to see this flag pattern develop a little bit more. But this is an excellent call. And by the way, if you are interested in getting on the list to receive the action trade alerts, super duper easy. All you have to do is go, is go to www Dallas Trading Floor and then sign up for the free action trade alerts. And it's super easy to do. And it's just so you can take a look at the website. This is how the website looks, and of course it's right here. It says subscribe, free action trade alerts, first and last name and email, and then hit that subscribe button, and you're good to go on that. And it looks like Snap may be breaking out. So, and this is potentially a flag pattern, which is a very auspicious pattern, and it can lead to some very nice gains. So I'm going to be watching that one. And again, of course, you go over to Dallas Trading Floor and subscribe to the free trade alerts. By the way, if you're interested in learning the method that I use the CanSlim method, and it's many of the top traders in the world use this. I was fortunate enough to be introduced to this about 20 years ago. And basically, you can find out how this works basically by going over to the Learn to Trade bookshelf, and then this book here, How to Make Money in Stocks: A Winning System, Good Times or Bad. That's the main book, and then also the companion volume by Matthew Galgani, How to Make Money in Stocks: Getting Started. This is kind of like a checklist and a sort of a cliff notes for this other book. I recommend buying these both, and this will give you an excellent background in CanSlim trading, which is used by many of the top traders in the world. So it's definitely a good thing to look look into. All right, so let's look at the next stock, JMIA. Thanks. This one's been doing really good as of late. This has come a little bit onto my radar. I appreciate you bringing it out. This is a company that does internet stuff in Africa, and I think the Middle East. So this is a good one. It's been looking really strong. 98 on that, on the stock right now. So been looking very, very strong as opposed to that. Let's look at the Bryan criteria, see if we can there's a place we can buy this thing. All right, it's got 6 out of 9. That's my minimum required, so it definitely passes that screen. It does have it's decreasing fund ownership, so I don't quite like that. Is there a buy point on this? There really isn't. Basically, there really isn't a buy point on it. Let's look at the daily. Let's see if we can find something some place to buy this thing. It looks as if it's moving up the 10-day exponential, but its earnings are in 7 days. Here's the thing. Here's what you need to do on JMIA. Don't buy it until it goes through earnings. Don't buy it until it goes through earnings, and that's in about 7 days. But get ready to buy this one. Get your order teed up. And I think if it pulls back to the 21-day exponential, which is about 1460, when it reverses, that's when you want to buy it. So I do think this will probably pull back after it goes through earnings. That's my guess. This is a very good stock, by the way. Thanks for bringing it up, because these are the kind of stocks you want to buy. When they have relative strength of 90, 95, these are the kind of stocks you want to buy, because you're buying in the top of the power curve that way, and that's really, really good. So very good, very interesting. Jim is gay. Well, I don't think so, but anyways, put that up there. Okay, alrighty. Won't give me any good things. Okay, all right. Is it gal? Oh well, whatever. Okay. Okay. All right. What's the buy point for Neo? Waiting for a pullback. It's not going down. You're right. Neo has been just really, really strong, and the place to buy Neo probably is is if it pulls back to 30. I don't think it's gonna, though. I think you might just have to buy this thing and just hang on for the ride. Yeah, it just doesn't look like it. Let's look at the weekly, see if there's any entry point there. Yeah, the only entry point on this is at the 21-day exponential, and that's at 30.40. So we're at 35.50 right now, up $4.92. You may just have to swallow hard and buy this one. It's gonna go through earnings in 14 days. I don't recommend holding it through earnings, but everything else kind of looks good. How do you determine the quality of a stock? That's a very good question. I kind of want to show you just a quick way that I do it. For instance, we're looking at Neo here, and I look at a quality of stock basically on these criteria, and this is the same criteria that William O'Neill uses. So that's how this works. Basically, there are 9 criteria in order to see if the stock is doing well. That is, are the earnings per share? Is the earnings per share in the top 20%, basically better than 80%? Well, in this one it isn't, but everything else is. Is the relative strength greater than 80%? Is the accumulation distribution rating A, B, or C? That means it's in the top. That's definitely the case. Are the earnings per share going up since last quarter? Yes. Are the sales going up? Yes. Current price, is it above $10? And why do we say that? Well, this is because penny stocks, or stocks below $10, typically are much more volatile and they're harder to buy. So we want really only buy stocks above $10. Is it how close to the high is it? We don't want to buy stocks we want to buy stocks when they're very close to their high, or within 15% of that. So that definitely passes there. Is the 15-day, is it above the 50-day moving average? Yes. And does it have a number of funds that are invested in the stock of more than 5%, more than 5? And that's definitely the case. So that's how you find a quality stock. And of course, this gives you a very quick view of it, to look at it very, very quickly. And and go from there. I don't think he answers from TikTok a lot. Okay, well, I do. I'm trying to be trying to be good here about it. PE ratio and earnings per share. Okay, here's why you don't want to use only PE ratio. One of the best stocks right now with a price to earnings ratio is, guess what? ExxonMobil. Let me show you. But would I buy ExxonMobil? No, because it's going away. So you don't want to use necessarily price to earnings ratio. Now I know that in all your classes in school, they're going to tell you buy those stocks that have the high PE ratios. Not a good idea. I can tell you that. The stock market is a forward-looking indicator that's looking to the future. Tesla has a horrible price to earnings ratio, but yet it's making all kinds of records. And why? Because it's looking to the future when the electric vehicle business may be very big. General Motors has a relatively great price to earnings ratio, but its stocks are down. So you don't want to use that price to earnings ratio. Trust me on this one. It's not the way it's going to work. Still think Tesla is pulling back. I ended up selling a lot. You know what? It's so hard to call it on Tesla, but I do think that it may pull back once more and move higher. But again, this is why buying at the right level of Tesla is so difficult. I want to see Tesla basically move above the 50-day moving average. I do think we're very close to that. So I want to show you the Tesla chart right now. And I do think, we're right at the 50-day moving average, and we're right at it. So that is, it's probably, once the overall market moves higher, you see, we pulled way back, but now we're moving up. We're at the 50-day. So if we get a follow-through day, if we get strength, the next few days, it's a buy because it's going to go higher. But the reason that you sell here is because you don't want to have it continue moving lower. Now that it has shown strength and come around, I think that Tesla may be safe to buy once again, and I think we may be able to it may be able to move about $40 from about 423 up to this 465. The buy point on Tesla currently is about 466. If it exceeds 466, it's going higher. So we're still a little bit below that. But I do think that if it moves beyond 466, then we have a potential movement higher on Tesla. It's just the problem is it's not necessarily just one day of up doesn't make a fall through day. We want to wait through the fall through day in order for that to happen. So let's take a look at the Qs. I did show you the QQQ slide this morning, and the Qs are trending a little bit lower still. I want to show you this, but we may have seen a turn. I hope we did. Basically, oops, there we go. Okay, let's see if we can get there. We go. This is currently the trend. This is currently the trend on the Qs. It looks as if we may have just made a turn. Now we need another up day. And then we need another update for a follow through, but we may have made a turn here on the on the Qs. So, but still we want to be in cash. We want to be getting ready to possibly go in more. That's why we want to be still pretty much in cash, and then then from there. Okay, the tech market is going up because work from home thing. Do you think tech stocks will survive the same trend? Well, I think techs are going up because it is changing. The economy is changing, and that's one of the reasons why I tend to be on my picks. I tend to be a little bit tech heavy on many of my picks. Today I bought a little bit of Form Factor because it was breaking out. I did sell Qualcomm today. I did a little small profit on it, not much. I tend to be tech heavy because that's sort of where the growth is in the market. With interest rates basically at zero, many of the financials and the traditional businesses really can't make a lot of money because they just don't have the margins and the growth. The growth is in tech, and that's the reason I'm pretty much of a growth stock investor, so that's the reason why I'm so tech heavy on that. So, um, okay. Hi Jim. What's a good point to buy for Neo? Wait. Okay. I took that question before. Okay. UEEC. Let's look at UEEC. See if we have anything there. UEEC. And let's see if I can give you. Did I get that right? UEEC. Well, I don't see that one as a valid symbol, so I'm sorry. I have to go move on beyond that. Can you check? Okay, I just did, Al. It's looking pretty good, but it's remember it's going to be it's going to be earnings in about 2 weeks, in 14 days. You don't want to hold this thing through earnings, so you want to be careful with this one. But it's looking very, very good. It's very strong stock, by the way. Thank you for that question. Thoughts on Uber? Uber. I don't know. UBER. Let's UBER. It seems to be kind of in this trading range, and I want to show you that on this chart here. Kind of, it's sort of ranging between about 32 and 38. This is a consolidation base, but there isn't really a good place to buy this. It's really not doing all that well in terms of, there's other ones out there that are just better than this. It's only got a relative strength of 75. It does have 6 out of 9. That's on the checklist. So that does pass for me. And it does have increasing fund ownership. But here's what I don't like about this one. Relative strength of 76, you can do better than that. And the chart is really kind of mediocre, to be honest. It is a downward trending chart, as you can see there. So I can't recommend Uber right now. I can't even really recommend it as a watch list. Let some other people be the pioneers. I think that would be that's a good idea. Imphy was acquired, so it's been acquired, I think, by I don't know who was it. Marvell that I don't know who acquired it. Very interesting company. It's pulled back a little bit, but it is good. It has been acquired, and I don't know exactly what the split is there. Yeah, here it is. Expects to adjust revenues. Okay, and part of the reason is I think that they were purchased by Marvell Technologies, I believe, if I'm not mistaken. So I don't know if this is one. It's got a 93 relative strength. There was a lot of buying on it. This was on the news of the merger. So let's see if I can see if news here. Okay, rating okay. No, it's still 93. So it's pretty strong. It has a cup with handle 125.83 is the buy point on it, but it's pulled back a little bit today. I would maybe watch this one. I believe this one was acquired. I'm not sure on that. I was looking for the news to see if that was in case the situation. What a name! You must have an Irish connection. Well, I did it. I think way back in the hinterlands. My family is actually from Texas, believe it or not. We're from San Marcos, Texas, a little small town near Austin. So that's actually where my family is. Not very sounds. It's a good Irish name, but I'm not very Irish. I'm not even a Catholic. So, but I thank you very much for that comment. Okay, let's see. What do you think about CGC? Let's look at CGC real quick. CGC. And the symbol is. It'd help if I put it in there. Right there we go. Canopy Growth. And we had another question about Canopy Growth. I'm really not a fan of the marijuana stocks not because I'm against that, but because they just don't have a very good chart pattern. And as you can see, this is the case, unfortunately, with. Let me see if I can get that to. There we go. Yeah, as you can see, this has a downward sloping trend. This is not what you want to buy. It. I know this. I know this seems like very obvious, but a lot of people don't check their trend. You always want to. Your trend is your friend. So this has a downward sloping trend. Now it has pulled up a little bit, but I just don't think this is where you're going to be. There is a buy point on a consolidation base at 22.19, but I can't get excited about Canopy. I can't get excited. It has a fairly decent checklist though, 6 out of 9, and we do have some a little bit decreasing fund ownership. I just think that there are better stuff out there. Relative strength's only 74. Why buy 74 relative strengths when you can buy 80 or better? There's enough 80 or betters out there that will make you a lot more money than Canopy Growth. Nothing against Canopy Growth, just saying. So let's see. All right, thank you. AMD, truly great stock, by the way. And by the way, AMD, I think for years AMD was just going nowhere, and then they got excellent management. This woman that is the CEO is just pretty fabulous. I think she got the company when it was trading at like 2 or something like that, and it's just been all up from there. She's been pretty fantastic. Interestingly enough, I heard that she was actually related to the gentleman that runs the CEO of NVIDIA. So she's a pretty good company, I have to say. Yeah, this is looking good. 92. Is there a place to buy this thing? Gosh. Yeah, it's got a strong checklist. The ownership is increasing. Yeah, this is just one of the best chip stocks out there. Now, it's pulled below the 50-day, so it looks like it's making a turn here. I want to see it pull above. I want to see it pull above this the 50-day line. So let's look on the daily chart. Let's see if there's any entry point here. It still doesn't have a change of direction. We're still in a downward trend on AMD, as you can see. But if there's a reversal on this, and it looks like there might be, and it reverses up to this line, this 50-day moving average, then it's going to move higher. No real buy point on it. The last buy point, basically at 56.63. So it's moved a little bit away from that. There's been some selling. Again, this is the case of a stock that's just doing everything right. It makes big earnings, and then it sells off after earnings. This is why you don't want to hold a stock through earnings. The profits on AMD were up 129%, and yet it fell away. This is very, very common. This is one of the reasons why, at least if you're swing trading, you kind of want to, don't hold it through earnings. It's just a good idea to sell your issues a day or so before. That's what I did on Qualcomm. Even though I probably would have liked to have held it, I don't know how it's going to work through earnings. There probably will be a pullback on. I may be a buyer after earnings, but I sold it. I was up a little bit and I sold it. And the same is true with a stock with most stocks. You want to hold them into earnings and then sell, and that's just it's just the old buy in rumor, sell in news. So that's kind of the deal there. Baba and what happened? This is a classic case of a buy on rumor, sell on news. Let's look at PayPal first. PYPL. This is a truly great company, but it just fell off the cliff here. What happened? Well, this happened, as you can see, and I'll show you what happened. You see how this earnings per share was up 41%, and then boom, it moves down. Why? Because the day before, you see it's pulling up, and then it moves down through earnings. So this folks is reason why you just don't want to sell that thing before earnings, because that typically, even if they have a good number, and they had a good number here, the great number, and they still went down. So that's just kind of the thing. Let's look at Baba. And of course, Alibaba is probably one of the biggest traded of the Chinese stocks. And it just fell off the cliff. It's got a similar problem. It's basically now it's a relative strength of 93. The reason I believe this, I think people are selling it before the election, because Baba could be, if depending on who wins the election, Tariffs could be a major factor in the price of BABA, but this is another reason why you just want to set those stop losses, and when it violates, when coming into earnings, you want to get ready to sell it, and when it violates the 21-day exponential, which it did, that's when you want to get ready to sell. And sure enough, it went straight down. So it'll probably come back. I mean, it's got a generally upward trend on it's generally an upward trending stock, but it's definitely in a situation now where where it's going to pull back. So it's just one of those things when it comes to stocks. Well, I have gone through a whole hour here, so appreciate everybody stopping by, and I hope that I hope that you will consider signing up for the for our action trade alerts, and they're available. They're free, of course, and all you have to do is go over to go over to www Dallas Trading Floor and sign up for the free action trade alerts. And by the way, if you are looking at us on YouTube, definitely like us. I mean, that would be great if you did that, because it really helps me. And so kind of smash that like button. I always do that. Thoughts on the fallout from the election? Well, I think it's going to be, this is why I am, predominantly in cash right now. I'm kind of trying to see, I don't want to, I just don't know exactly what's going to happen, who's going to win the election, and I do think that it does make a difference. But I can't. Right now, Biden is up in the polls, but he could very well lose in the Electoral College, and so I do think that depending on who wins, certain sectors will be favored. The healthcare sector typically will do better if Biden wins, and then many of the basic industries will do better if Trump does. So it's still really up in the air. But this is why coming into a major event like the election, sometimes it's good to get into cash. So that's kind of what I've done. Well, until tomorrow. Wait a minute, I have one more thing. Thank you very, very much. Oh, thank you so much for the for that. And by the way, if you want to subscribe, www Dallas Trading Floor. Well, everybody, stay safe and happy trading, and I hope to see you back here tomorrow.